tell you.
All right, we are awaiting earnings in like 36 hours that could decide the fate of this market. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, a dramatic escalation. The president moves to fire Fed Governor Lisa Cook, but she refuses to resign, setting up a legal battle. Meanwhile, on the trade front, President Trump threatens fresh tariffs and export controls in retaliation against digital taxes on American tech companies. And in corporate news, AT&T shakes up the telecom industry with a deal that may help it stay afloat and fend off any regulatory concerns. Did I mention it's a $23 billion deal?
I'm about to say that again, so let's talk about it. AT&T will buy spectrum licenses from EchoStar for $23 billion in cash. This should add to coverage in more than 400 markets across the United States. You take a look at the share reaction right now. EchoStar, as you might imagine, up about 82% pre-market, absolutely soaring. AT&T as well, even with that $23 billion price tag, you can see shares up about 0.5%. So investors feeling pretty good about this.
All right, and Eli Lilly's experimental obesity pill helped patients lose 9.6% of their body weight in a trial that moves the company one step closer to a potential approval. It looks like the market is taking that as a positive piece of news right now, with the shares up 3% in the pre-market. We know, Katie, that typically investors like to see these therapies help patients shed as much weight as possible, but side effects are also an important part of it.
Absolutely. Side effects and the corresponding dropout rate really in focus here. Let's dig into some of the details with Bloomberg Health reporter Damian Garde, who joins us now. So shares up about 3% pre-market, a much better reaction than what we saw earlier this month.
Absolutely. So these data follow on the arguably more important results that we got earlier this month of how Lilly's pill fared in people diagnosed with obesity. The latest ones are people with obesity and type 2 diabetes. That initial reaction was one of pretty massive disappointment. Lilly had its worst day in about 2 decades and lost about $100 billion in market value. So today's improvement kind of has to be viewed in that context. But I think zooming out, as Matt mentioned, this is the final hurdle they had to cross in order to submit their plans to the FDA and win FDA approval for this pill. So the expectations, I think, long-term have come down based on the data we've seen, both in terms of the percentage weight loss and the gastrointestinal side effects. But in the long term, this is still expected to become a multi-billion-dollar product once Lilly can market it in the U.S.
When will we be able to buy this pill? And
he's asking for a friend.
And what kind of side effects are we talking about? Because 10% seems perfect to me. Perfect.
Sure. So 2026 would be the earliest that the FDA would approve this, and presumably Lilly, is working with all expediency to get that filing in and to market it as soon as possible. The side effects are relatively high. We're talking about, these are somewhat uncomfortable topics for morning television, but diarrhea, nausea, gastrointestinal issues. These are similar to those that we've seen in other medicines in this class, like Wegovy, Ozempic, Lilly's other medicine, Zepbound.
So not milder. Not better than those.
No, not at least according to the clinical data we've seen. It's a little on par with some side effects. It might be a little higher than you might get from Wegovy or Ozempic. The allure of this medicine really is the fact that it is a once daily oral pill. It's a small molecule. It's much easier to take than the weekly injections, or easier may be a stretch. More convenient, and I think there are people who would prefer a daily pill to a weekly injection.
I mean, I'd take the shot if it meant fewer side effects, right? Am I editorializing a little too much here?
You might be. You might be. It's turning into the Matt Miller.
Damian, great to get the facts on this. Really appreciate it. And interesting to see the market reaction, because typically, if it's less than double-digit percentages, you'd expect the market to sell this stock, but it's up, again, 3% in the pre-market. We mentioned AT&T's plan to buy $23 billion worth of spectrum licenses from EchoStar, adding to coverage in virtually every U.S. market. Bloomberg Tech co-host Caroline Hyde joins us with this. For me, as a former telecoms reporter, pretty exciting. Katie, her eyes are like glazing over at the idea of buying spectrum.
But I play an interested person on TV.
And you care, because you want to be able to call your family and friends whenever you want with 5G, with whatever's going in terms of the actual broadband going into your home. And for that, you need spectrum. You need to buy it, and this is why AT&T is wanting to improve its coverage around the United States. EchoStar, more importantly, has basically been pushed to sell off its spectrum. It wasn't doing enough with the spectrum that it had already bought. And Brendan Carr, who's over at the FCC, was getting more and more frustrated by this. In fact, we had to see the chairman of EchoStar go in to meet Trump and talk about all of this. They were potentially going to file for bankruptcy. They were missing bond payments. Then they've really been cajoled into selling this off. So they're getting a nice chunk of change. They're also still able to offer mobile offerings with a partnership with AT&T, and AT&T is able to continue to build up the infrastructure play in the United States. This is actually important if you think about the amount of ultimate access we're going to need to data if we're all going to keep using ChatGPT in the way that we are. So this is about US infrastructure at the end of the day.
Absolutely, and we could go on and on.
Did I make that sexy enough, Katie? Are you vaguely interested in spectrum?
No, it was compelling, and I mean, you really put it into context nicely that this matters if you're just an average person walking around with a cell phone.
And AT&T contract, because if you have a Verizon contract, you know, maybe you already have no problem calling everyone from anywhere and using ChatGPT.
Let's talk about another piece of news in your world, though, and that is what's going on with export taxes. You had President Trump vowing to impose fresh tariffs basically on semiconductors, on American technology, saying that these aren't designed to harm or discriminate, but still a lot of question marks here.
This has been a frustration for Trump since the previous administration. Back in 2019, remember, France, other parts of the EU membership started to impose these digital services taxes, basically saying, look, if you're Meta and you're going to sell advertising within your offering to my citizens, I want a cut of that. I want to be able to tax you, but it's all very awkward as to how they tax them. So it wasn't on profits, it's on revenues. So they get about 3% of revenues, which is sold in their countries. The UK does 2%. But most notably, Trump has been aggravated by what he sees as an impact on the US winners. And therefore, he wants that taken off the table. It's so notable that in the agreement just a week ago or so that we got between EU and the US, the EU has specifically said, we are not touching the Digital Markets Act, the digital services taxes thus far, because they want that as a chip on the table to be able to get their wine into the US without being tariffed. So all of this is the ongoing tariff battle. But it's interesting that almost AMD and Nvidia are going to get impacted if we don't get a settlement on taxes that are currently impacting Meta, Amazon, Alphabet. So there's a bit of a switcheroo here. Interestingly, Nvidia, AMD are both higher pre-market, so I don't think people are particularly worried about it.
I mentioned at the top 36 hours until we may get a new narrative. I meant really 31 hours, right? Because it's after the bell tomorrow, Nvidia earnings. How much are you focused on that on your program at 11 o'clock today?
I mean, not at all. I mean, we're so obsessed. And this is a company that's going to deliver basically 50% revenue growth, earnings per share growth, all about China. But this really is basically an equivalent macro bellwether as the Fed. It's a $4 trillion company, and it's all about the AI euphoria that we've seen that drives the S&P 500 and the NASDAQ to be really resilient despite this ongoing tariff headwind.
Absolutely. Looking forward to those earnings. As Matt said, could totally change the narrative. That is Caroline Hyde of Bloomberg Tech. You can catch her at 11 a.m. You know, on the close yesterday, we were having a really interesting conversation with Natasha Sarin of the Yale Budget Lab, basically speaking about, you think, about all of the capex that's going on by these big tech companies, that if you think about the U.S. economy ex AI, we could look like we're in a recession. Yeah, no, it's interesting. That could be the main driver of the economy, just like it is the main driver of, you know, earnings growth in the market and the main driver of the gains that we've seen in equity indexes. That would make sense. Yeah, definitely. So we'll get an update on the state of AI and tech spending tomorrow. But let's turn back to politics right now. President Trump moving to remove Fed Governor Lisa Cook over allegations of falsifying mortgage loans. Cook has remained defiant, saying she refuses to quit despite the pressure. Former New York Fed president and Bloomberg opinion columnist Bill Dudley joined Bloomberg earlier today.
This is a real assault on the Federal Reserve's independence. I'm sort of surprised that the markets are so relaxed about this. Now, maybe that's because we don't know where this is going to go. We don't know whether Lisa Cook is going to be able to stay in office. It certainly looks like the bar to getting her out is quite high. There's no precedence for this. So we don't really know what the law is until the courts actually rule on it.
For more, we're joined now by Michael McKee. He is Bloomberg's international economics and policy correspondent. And of course, Mike, I'm going to ask you the question that no one really knows the answer to at this point, and that is, does President Trump have the authority to do this?
We don't know. It appears he does not. And that's what we're waiting to find out, because we don't know if she's actually fired or not. It's so far been just a battle on social media, basically, with the president saying, I have determined that there is sufficient cause to remove you from your position, and Cook responding, President Trump purported to fire me for cause when no cause exists under the law, and he has no authority to do so. And she said, I will not resign. So what happens if she shows up at the Fed building today? Does the Fed let her in? Does the president send over U.S. Marshals to take her out? We don't know. That all has to play out yet. So there are a bunch of questions still to be determined. The first one is she actually fired? And then what does for cause mean? The president can only fire somebody for cause, but what she is alleged to have done, and there's no proof yet, that it took place before she was on the board, and courts have generally held that it has to be malfeasance in office or ignoring what your responsibilities are while you're in office. What can the Fed do or say? They don't have the details either, so they can't really come to her defense or push her out the door. They have to wait for the evidence process to work its way out. And then how much of an economic threat is this? That's the thing that Bill Dudley was surprised that the markets haven't picked up on yet, because it could mean higher inflation if the Fed is pushed by a replacement to lower rates.
It doesn't seem like that serious an allegation. Writing one mistruth on a mortgage application coming from a president who's been criminally convicted of 34 counts of falsifying business records, right? So it seems like he just wants to push her off the Fed so that he can get somebody who is more in line with his take on interest rates in that seat. And I wonder why the bond market isn't, in that case, reacting more strongly in any part of the curve right now. I mean, it would seem like that should erode confidence in our institutions, in the Fed specifically, and it doesn't look like the bond market really cares.
My guess is that at this point, because these questions are unanswered, the bond market is betting that Trump won't get away with it. Now, if it moves forward, if she's removed, she goes to court and asks for an injunction and the court says no, you have to leave until this is adjudicated, which is what happened in the cases of the other people that Trump had tried to fire, then the market might react more strongly, because then it becomes a real possibility. And given all the momentum in the equity market right now, you don't see stocks moving, even though on tariff day they dropped significantly, probably for the same reason. They're thinking this is a distraction by Trump, it's not going to happen, and so we can go on and party. And again, if something does come through that suggests Trump is taking over the Fed, that would be a lot more concerning.
Well, to your point on inflation, we also heard from Michael Feroli over at JP Morgan writing that perhaps the more relevant outcome of a successful removal of Cook is that other governors could potentially be exposed to removal as well. This would add to upside inflation risks, but perhaps just too many unknowns at this point for the market to truly price that in. Our thanks, of course, to Bloomberg's Michael McKee following this story and so many others. Let's check in on these futures, which don't look too stressed out at the moment. You have the S&P 500 pretty much unchanged pre-market. The NASDAQ 100 a little bit more direction, but as Matt said, of course, Nvidia earnings after the bell tomorrow could rewrite the script. Right now, the NASDAQ 100 down slightly. The Russell 2000, actually, I can't think of a reason why, a little bit higher this morning, even as you do have a slight move higher in rates, Matt.
Yeah, a little bit of a move higher in rates, but maybe small cap investors are betting that the Fed really will go forward with the cut. Right now, the world interest rate probability function on the Bloomberg puts an 86.5% chance of a cut at the September meeting, and still has the Fed cutting down to below 3% by the end of 2026. Coming up, more on the turmoil unfolding in Washington. We'll get the view of Terry Haines. He is the founder of Pangea Policy, and he has fantastic historical context to add to this. This is Bloomberg Open Interest. Let's get to high interest. Look at what's making headlines around the world. Interactive Brokers Group is climbing in pre-market trading after news it will join the S&P 500 index before trading opens on Thursday, and it will replace Walgreens. So Interactive Brokers, IBKR, rising 2% 2.8%. If we looked at Walgreens, it may be down in the pre-market. Who knows? It's just my guess. The hair care product maker Olaplex said it will buy Olaplex, OLPX. It will buy the beauty-focused biotech company Pervala Bioscience. It's the first acquisition for Olaplex. The company has been on a bumpy ride since it IPO'd in 2021. And billionaire investor Warren Buffett shut down speculation of a blockbuster railroad mega merger, saying his company Berkshire Hathaway is not looking to buy another train company. Shares of CSX, ticker CSX, fell on the news, squashing investor hopes that Berkshire's rail unit BNSF would acquire the rival railroad operator. Katie?
Yeah, that's certainly pressure shared yesterday as well. But let's get back to our top story, and that is President Trump escalating his battle to exert more control over the Federal Reserve. Here's former Fed chair, vice chair, that is, Lale Brainerd, speaking to Bloomberg on the president's move to fire Fed Governor Lisa Cook.
I think the Federal Reserve is in an incredibly difficult position here, but you have to remember, this is not about an individual governor. This is really an unprecedented attack on the independence of the Federal Reserve as an institution, which means higher inflation potentially, less credibility, even higher long-term interest rates, bad for the economy.
For more, we're joined now by Terry Haines. He is Pangea Policy founder. Terry, great to have you with us. I'm taking a look at your most recent report. You write that if President Trump intends the Cook business as more pressure on the Fed to lower interest rates, that likely backfires. Tell us why.
Well, fundamentally, because the governors have shown themselves impervious to pressure, starting with Powell on down. If they're not going to bend or buckle based on everything that's gone on in the last 4 or 5 months, I doubt very much that they're going to do that now. Even Powell at Jackson Hole, I think, is overread by the markets, frankly. You want regulators to say their openness to declare their openness to new data, potentially new indicators. And so Powell saying that he was open to it isn't exactly a land rush. It's more of a regulator saying that this is what he or she might do. So in that context, I don't think that anything that might happen with Governor Cook, we don't know the facts behind the allegations, certainly. But I don't think anything that goes on with Governor Cook is going to change the view of the board materially one way or the other.
What do you think would happen if Lisa Cook were replaced and the president then had 4 members on the 7-person board of governors? Do you believe the kind of conspiracy theory that they would then act as a majority to fire all the regional presidents?
You know what, Matt, I think what's happening here is, and what markets need to understand is, this is really about 2 things. One of which is talked about a lot, which is the interest rates business and pressuring. The other isn't talked about so much, although both Trump and particularly Treasury Secretary Bessent have been very explicit about this, including in the long-form interview that your colleagues at Surveillance did with Bessent week before last. They talk about making the Fed a more dynamic institution, one that is much more interested in getting past data and kind of supporting the core economic mission of the country. That's very much what they're up to. That's music. That's music to the ears of lots and lots of people in the markets, frankly, because people come on your air every day and decry the whole data-driven mantra that is part of the Powell chairmanship. So they see the opportunity for the Fed to become more dynamic and forward-looking as, frankly, a good thing. So, but beyond that, I think this is much less about the individual, the individual firings and all the rest. And for the record, just to wrap up, I'm not somebody that thinks that the president has the ability to remove governors willy-nilly, although the for-cause exception has not been litigated before. Fundamentally, the Fed is a creature of Congress, was created by Congress, uses Congress's constitutional authority, which is why the president's ability to do anything about the Fed is very limited in the first place. It's pretty much that simple.
Well, I mean, does the president really want to remove Lisa Cook because of deceitful and possibly criminal conduct, as he says? Do you think his base believes that he cares that much about deceitful and criminal conduct? Or is this another attempt to attack Fed independence? And shouldn't that worry, especially investors in U.S. assets?
Well, the president will want who the president will want, and the president always, under the current system, the president always gets to nominate Fed governors. But equally fundamentally, it's up to Congress to provide advice and consent on those governors and decide who gets to be a Fed governor. That's not a rubber stamp. As recently as 23, when President Biden wanted Bloom Raskin as governor, as I remember correctly, as the vice chair, and the Democratic Senate said no. So, Trump doesn't have the ability to unilaterally impose his will upon the Federal Reserve Board of Governors anyway. The presidents always believe they've got people queued up who might vote as they wish. They are very frequently disappointed in that regard. Biden himself was disappointed. He thought he had the continuation of a very dovish Fed when Powell was renominated along with Cook and some others, and he was immediately disappointed because they moved hawkish almost instantly.
All right, Terry, great to get some time with you. Really appreciate it. Terry Haines there of Pangea Policy. I'm sure we'll be talking much more about this and hopefully more with Terry as well. Coming up, Moneta strategist Aoifinn Devitt on the market impact of the overhaul or potential overhaul at the Federal Reserve. This is Open Interest. We are just seconds away from the start of trading on this, the day before Nvidia comes out with earnings. Right now, nothing happening in futures. Right now, we're down 0.7%. Just for the record, the all-time high is 64.68. We closed about 30 points below that yesterday. So we're still like up there at these heights, but we just can't make any forward progress. NASDAQ futures down as well. Russell 2000 futures, as Katie says, God knows why they're up, but 0.1%. Elect is a power company generating, trading electrical power that operates in the upper Midwest. So for the fantastic people of that part of the country, that stock is up 50% with reinvested dividends over the last 5 years, better than a stick in the eye. Freshworks ringing the bell at the NASDAQ, provides software solutions for small and mid-sized businesses to communicate over email and phone and social networks. The stock is down 62% since 2021. So
there you have it. Let's get to Eli Lilly. Eli Lilly's experimental obesity pill helped patients lose 9.6% of their body weight in a trial that moves the company one step closer to potential approval. Remember, they came out with the first of 2 studies earlier this month, really poorly received. This one going over a little bit better. Side effects and the dropout rate coming down as well, I believe. You can see that Eli Lilly shares higher by about 3% rate at the open mat, still lower on the year, but climbing out of that hole.
All right, so I think that's a fascinating story, possibly more interesting to Katie than the AT&T story, which is, I mean, they're adding spectrum. This is what their customers want. This is what their investors want. They're buying it from EchoStar for $23 billion. It's a cash deal. You can see AT&T shares are unched at the open. So for spending $23 billion, having your shares unchanged is, I think, pretty good. EchoStar shares are up 80%. EchoStar had been, I guess, urged to get rid of this spectrum because they were like not doing enough with it. But now AT&T can use it and EchoStar can ride on those coattails. Let's get back to the broader markets right now. Aoifinn Devitt joins us, Moneta Chief Global Market Strategist. And Aoifinn, I'll start with the Lisa Cook question because it's the hot story right now, but it doesn't seem to be moving markets. The president is attempting to fire Lisa Cook from the Federal Reserve Board of Governors. She says she won't go. No one knows how this is going to turn out, but bond yields aren't rising significantly and equities aren't falling significantly. So does it matter?
I'd say markets are definitely queasy about this. We've seen this reaction in the past. Any time an overture like this has been really shot across the bow at Chairman Powell, the markets will react slightly. So there's a queasiness, but this is not a typical kitchen table issue because the Fed is kind of a long-dated structural, almost an abstract concept in terms of its independence. Much more of a kitchen table issue is something more concrete like we had last week, the uncertainty and the cold shower that was poured around AI. So I'm not surprised to see markets kind of lackluster in their response to this, but it is a queasiness and uneasiness, and let's just see where it ends.
Well, Aoifinn, let's talk about that a little bit, because say that Trump is successful here, that Lisa Cook is removed, and I believe that gives President Trump 4 of 7 Fed governors. What does the market reaction look like? What is the potential trade there? Because so far we've heard that that would probably pressure long and rates higher, not that you're seeing that too much this morning.
Well, markets don't always know what's good for them. And right now, they would probably receive very well a jumbo rate cut in September. Certainly, one rate cut is being expected. And that is certainly the direction of travel that a Trump-dominated Fed would bring, is more rate cuts. And markets would welcome that. But then we look to the long end of the yield curve. We can see that the gap between the short and long dated bonds is one of the largest it's been, and it's getting larger. And this is a pattern that we're seeing repeated across the world. We're seeing the same thing in 30-year gilts in the UK. When markets see that they are not confident in the fiscal or monetary direction of a country, they vote with their feet very decisively. So I'd say it's the sugar rush that would come from cut rates in the short term. That's why markets are reacting, I think, in quite a positive way.
Let's talk about the markets and a little bit of a rotation that we saw over the last week. Obviously, Friday was a banner day for bulls, but I wonder if you want equal weight exposure here, or do you want to stick with that mega cap concentration? If you have more of a value tilt, I'm guessing that you want to look more into the underloved industrials, financials, asset managers. What say you?
I say definitely equal weight. Markets are going to display different levels of volatility according to whether it's the mega cap or everything else. Everything else, the kind of volatility that equity displays, is the type of volatility that I think investors have now come to expect with their equity allocation. The volatility they're going to see in mega caps is something totally different entirely, probably twice that volatility. So yes, they need to hold both, but they need to have a much stronger stomach for owning the mega cap tech stocks only. So I would not lean into an overweight in those positions. I would be equal weight. And as we can see, there is some appreciation right now. Certainly for financials, they've had a good tailwind. And there's like the pharmaceuticals, like that Eli Lilly you showed, a little bit more trading on fundamentals, which is more of a positive side. And finally, I'm not surprised that Warren Buffett is not getting into railroads. That infrastructure ship may have sailed, but the infrastructure that is really exciting investors is around data center and the other picks and shovels around AI. And I'd say that is a very good, stable, long-term trade at the moment.
Well, Aoifinn, let's talk a little bit more about those mega cap tech names, because we have Nvidia reporting after the bell tomorrow. And even if you are in an equal weight sort of setup here when it comes to this equity market, Nvidia feels too big to ignore. Put it into context, though. When it comes to sort of the mood music in markets, how important are those numbers after the bell tomorrow?
Nvidia will always be the canary in the coal mine for any indication of trend around AI, or a change in demand patterns, or maybe a change in the efficacy and the productivity gains. And certainly we had a harbinger of that with the MIT report last week. So there will be a zealot's focus on the Nvidia earnings, and really just a telegraphing from them as to what's ahead. They are still the market leader. They have first mover advantage. And I don't think investors can get away from an overweight Nvidia with the way it's heading in terms of its market cap really ramp up.
Any concern about inflation, as we've seen, CPI and PPI tick up, but a lot of people are saying that we're not going to see the real tariff effects until Q3, maybe Q4. Of course, those people were previously saying Q2, but they continue to push that back.
Definitely inflation is a nagging concern. Again, just to look across the world, in the UK, we had a 3.8% number that really sent chills through markets. We do know that the tariff effect will be maybe transitory in that it's one-off, but it is still to come. We know that those numbers have been absorbed by companies up to now, and the transmission effect has not really been seen. So yes, we are concerned about inflation. And that's why I would share the view of your previous guest around what this actually means in terms of the Fed. Does it mean that they will simply throw off the guardrails in terms of monetary easing? Probably not, because they have to look at the data. If inflation starts to get out of control, well beyond their previous target, they simply cannot, in their right minds, cut rates with abandon.
All right, Aoifinn, and of course we'll get an update on inflation, at least in the U.S. when it comes to Friday's PCE numbers. Great to get some time with you. That is Moneta Chief Global Market Strategist, Aoifinn Devitt. Meanwhile, let's get a check on this stock market right now. We're just under 8 minutes into the session. You can see it's pretty quiet at the index level when it comes to the absolute change in the S&P 500 right now. It's lower, but by less than 0.1%. You take a look at the split, though, gainers versus losers. You do have more losers than winners right now, but up at the top, your biggest gainer in the S&P 500 is Eli Lilly. As we've been discussing, they got some good news when it comes to the second trial for their obesity pill. That is worth a gain of about 3.4%. You also have Broadcom higher this morning, as too is International Business Machine, IBM, and AMD as well. But then you take a look at the downside, and this explains the conundrum we're in at the index level. You have Apple, Alphabet, Nvidia, and Meta all lower this morning. Of course, we're really in wait-and-see mode when it comes to the tech sector ahead of Nvidia results tomorrow. But let's take a look at the sector breakdown as well. It's what you would expect. You have healthcare up at the top. Thank you, Eli Lilly, higher by about 0.3%. Utilities and industrials having a good day as well. I'm going to go ahead and call tech unchanged. But then you go down the list. Consumer staples, energy, and communication services are your big losers today. That sector, communication services, off by about 0.5%, Matt.
All right, very cool look at the S&P and a breakdown of the industry groups. Coming up, we're going to talk about AMD. Those shares are popping on a partnership with IBM to create a quantum supercomputer. Could the pendulum be swinging? Does Nvidia have real competition here? Could we be talking about an all-new AI leader sometime in the distant future? This is Open Interest.
Welcome back to Open Interest. A check on the stock market right now. The S&P 500 trying to decide what to do. Currently unchanged at the moment. You do have the tech names a little bit higher in the NASDAQ 100, maybe by 0.1% or so. But it's the small caps that are outperforming so far this morning. The Russell 2000 higher by about 0.4%. It seems like bond traders are pretty locked and loaded on the idea that we're going to get a September rate cut. Maybe that's what's coming through in the small caps today, but we'll keep an eye on it. Meanwhile, it's time now for our top calls. Some of the analyst action in focus this morning. First up, Keurig Dr. Pepper getting downgraded over at HSBC after the company announced yesterday that it would buy the owner of Peet's Coffee for $18 billion. Investors are concerned about the company's plan to finance that acquisition with a mix of cash and debt. Shares currently off by about 1.5%. Next up, we have Canada Goose getting upgraded to a buy over at Baird. The analyst says that its improved product, merchandising focus, and marketing investment are driving momentum. And finally, AMD is getting upgraded to a buy over at Truist because it's seeing more AI traction with its customers. AMD shares higher by nearly 2%, Matt Miller.
Have you still never had a Dr. Pepper?
Still have never had a Dr. Pepper.
You've never tried a Dr. Pepper?
No, and I don't own a Canada Goose code. And I don't know how I interact with AMD, but I probably do. Hey,
you may be interacting more and more with AMD in the future. Let's talk about that because they are partnering with Big Blue to build a quantum-centric supercomputer. Here with more on what that is Mandeep Singh, Global Head of Tech Research for Bloomberg Intelligence. Mandeep, obviously it sounds cool, but how soon is Katie going to be interacting with a quantum-centric supercomputer?
Well, even if she is interacting with it, it'll be abstracted from her that in the sense she may not even know that she's interacting with a quantum computer because that's what these hyperscalers have done. They've put everything on the cloud in a way where you can just click a button, instantiate a server or a service, and even deploy your chatbot or build up your website. So to my mind, what AMD is doing is really kind of partnering with an IBM simply because you don't know what the next big thing in semiconductor chips would be. I mean, obviously it's AI chips right now, but hyperscalers are competitors to all of these semiconductor companies. And so if you are an AMD or any other chip maker, you want to create an ecosystem where you can partner with someone, and I think that's what AMD is trying to do here.
Well, the less I know, the better. I say that I don't interact with AI because I don't use ChatGPT, but I'm sure that it's in my daily life, whether or not I like it. Let's talk a little bit about what this means for AMD. You think about the competitive landscape of the chip industry. I mean, Nvidia just running away with it, a real competitive moat there. What does this mean for where AMD falls?
Well, so the one thing that has changed this year is everyone is excited about reasoning models. So far, what we have seen is AI progress was driven by how good pre-training was. And pre-training was determined by scaling laws. If you threw more compute, the model will keep getting better. This year, with the reasoning models, with the success of OpenAI O3 and other reasoning models, everyone has realized you don't need to spend as much on pre-training. You can do a lot more at inference time. And that is what is creating an opportunity for, likes of AMD, because with training, Nvidia almost has 100% share. But with inference, that's where your smaller players like AMD, like Cerebras, Samba Nova, that's where the hyperscale own chips come into play, because you don't need the cutting edge chips for inferencing as you do for training.
He's telling me that because I interviewed the CEO of Samba Nova a couple times.
There you go.
And I thought it was such a cool story. I want to pivot to the digital taxes that President Trump, he's long had a problem with digital taxes that other countries put on basically U.S. champions, our hyperscalers. And now he's threatening perhaps export curbs in order to combat those, or new tariffs. How does this change the picture for an AMD, for an IBM, for an Nvidia?
I mean, I think it changes it more for big tech than for chip makers. I don't think, the export curbs are actually be applied. It will be more a negotiation tactic. But for a hyperscaler...
Well, they'll add export taxes. I mean, Nvidia and AMD already have agreed to pay export taxes.
Yeah. But, for a hyperscaler, which has a sizable EU business, and it was quite restrictive in the sense you had to abide by the Digital Markets Act or the Digital Services Act in the US, in the EU. So from that perspective, I do think, this may ease up the regulations a little bit if he's successful. And that means probably more profits in the region for hyperscalers. I don't think it changes, anything in a big way for the semiconductor companies.
And Mandeep, we would be remiss not to ask you directly about Nvidia earnings after the bell tomorrow. I mean, you take a look at what investors and what the sell side are saying heading into this report. It seems like the tone is that this is going to test Wall Street's faith in the AI boom, that we're going to get an update, of course, on CapEx. But I feel like you could say that every earnings season.
Yeah. Well, in this case, I think this is the first time they'll be reporting full Blackwell numbers. So think about, GPT-5 and all the latest models that have been released. It's on their Hopper architecture. Now that Blackwell is in full production and they're shipping it in bulk, what does that change in terms of, the training and the large language models race? And how does that influence, the buildup of these clusters going forward? Because they're talking about Rubin, the architecture following Blackwell. So I think it's important for them to lay out the story in terms of how successful Blackwell is and what it means for ASPs and margins.
Well, the implied one-day move for Nvidia shares is about 6% in either direction, so should be fun either way.
Are you using EE Go on your Bloomberg terminal?
EE Go on your Bloomberg terminal.
I like that. If you use EE space SURP, you get a great picture of the previous reporting quarters and the bandwidth there.
Just an embarrassment of riches when it comes to that Bloomberg terminal. Mandeep, great to preview some of the action with you. That is Mandeep Singh of Bloomberg Intelligence. And good news, coming up next, we're going to talk more about AT&T looking to expand its U.S. coverage in a $23 billion deal with EchoStar. That conversation up next. This is Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on what stocks are doing about 22 minutes into the session. We're looking at very little change here. Red arrows, but the S&P 500 at 6436, just about 32 points below the all-time high of 6468. The NASDAQ 100 off, but only 1/10 of 1%. In terms of what's going on in, well, first of all, in bonds, you can see the 2-year yield right now actually moving down about 3 basis points, 369. I did see the long end moving a little higher. Nvidia off a third of 1%, so that doesn't help anything. AMD, as we were just talking about, up 1 1/3, 1.4%. Eli Lilly, after a pill that it's developing to fight obesity, helped customers in the trial lose a little bit less than 10% of their weight, but had the same or even worse side effects than the shot. Still, that's up, and Novo Nordisk is down. Telephone buying that Spectrum up 0.5% right now, and EchoStar selling that Spectrum up almost 80%, Katie.
Well, for more on that deal, we're joined now by Bloomberg telecom reporter Kelsey Griffiths. And Kelsey, it's interesting. Of course, EchoStar shares higher in a big way right now, but so too are AT&T shares. If you look at these numbers in isolation, you might have expected to see AT&T shares lower today, given that $23 billion price tag. But it seems like traders are voting with their feet and saying that the logic here makes sense.
Yes, there are a couple factors that we need to look at here. First of all, AT&T has been looking to expand their spectrum portfolio for quite a while, and this mid and low band spectrum that's really valuable for mobile wireless services is really few and far between at this point. So Dish and EchoStar is helping unlock a greater portion of AT&T's network with this sale. And for Dish, it's also great because it helps them take another step toward resolving a regulatory probe that had been hanging over them.
I'm just wondering if this helps AT&T catch up to Verizon, which had more spectrum, especially in the most used bandwidth. So I know Verizon also has far more subscribers. Does this help AT&T to get a leg up on the competition?
It absolutely does. At least in terms of AT&T's spectrum portfolio, this is going to help them leapfrog over Verizon and start catching up to T-Mobile's spectrum position. We're also going to see some expansion of the infrastructure that AT&T has access to in terms of these spectrum assets, and that's really going to help potentially immediately, as soon as this deal closes, consumers are going to get that benefit.
All right, so in terms of the funding and leverage, BI, Bloomberg Intelligence, says net leverage could tick up to 3 times. It closes a cash deal, right? But does AT&T have the money to do a $23 billion cash deal? How does their outstanding debt look right now? Does this put them in a problem in that sense?
Well, I think AT&T is looking at this as a huge investment into the future of the company that is going to pay dividends down the road. Unfortunately, my reporting hasn't taken me into looking at the specifics of the balance sheet this morning, but I can tell you that this is a very important investment that they're making, and I think that's what the market is reacting to.
I always look at the DDIS page.
I know you do.
So on the Bloomberg terminal, if you type DDIS, and this is something I learned when I was a telecoms reporter, you know, a young cub in Frankfurt covering Deutsche Telekom. Total debt at AT&T is $143.3 billion.
Certainly seems like a lot.
So it is a huge amount. And as I said, BI is worried about the leverage ticking up there a little bit. So this is something that we'll continue to cover. Kelsey, great to get some time with you. Really appreciate helping us sort out the competitive position of telephone versus Verizon versus T-Mobile. Coming up in the next hour, eToro global market strategist Lale Akoner joins us on President Trump's pressure on the Fed. Plus, Marc, Rosen, the CEO of the company behind brands like JCPenney and Brooks Brothers, and the head of Cadillac's F1 team joins the show. This is Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. We are waiting some economic data landing at 10 a.m. on the dot. You take a look at equity markets, not doing much right now in volume, just pancaking right now.
Pancaking. Coming up, a dramatic escalation. The president moves to fire Fed Governor Lisa Cook. She refuses to resign, and this sets up a big-time battle.
Meanwhile, on the trade front, President Trump threatens fresh tariffs and export controls in retaliation against digital taxes on American tech.
And as more retail results roll in, we'll get a read on the consumer with the CEO of Catalyst Brands, the company behind JCPenney and a brand I grew up with, Brooks Brothers.
There you go. Meanwhile, we do have Conference Board consumer confidence figures hitting right now for August, coming in a little bit above expectations at 97.4. That is also slightly above the prior read of 97.2. So let's break it down now with Michael McKee. He is Bloomberg's international economics and policy correspondent. So what to make of this? What to make of this survey data?
This really, when you look at all the three major indexes that they publish, shows very little change in the way consumers are looking at things during the month of August. The initial report of consumer confidence for August was at 96.5. So the estimate, rather, was 96.5. So it is a little better than expected. There was a thought that this would parallel what we saw in the Michigan numbers with the confidence dropping a little bit because the tariffs were actually imposed this month. But it doesn't look like that's the case. Present situation just barely moved from 131 to basically 2.8 to 131. So it did go down in the revision. And the expectations index goes down in a revision from 76 to 74.8. So people aren't feeling better, but they're not feeling terribly bad about it at this point.
So this survey essentially tells us the same thing as the unemployment number, right? We're at a good level, but the question is, are we worsening?
Well, we're not worsening terribly, but we haven't hit the heights yet either of where a good number is for the Conference Board. So we're still waiting to see if people will act on what they're doing. I'm just calling up the release now because one thing we want to see in this is the buying plans. And it looks at this point like people are saying they're still hanging in there. In terms of automobiles, 12%, that's up from 11.3. Homes, 5.7 unchanged, and major appliances, 8.2, up from 7.4. So as long as people are feeling bad about this, they're still not saying we're going to cut back on spending. And
major appliances are the bane of my existence.
That's what would matter.
Like, could somebody invent an air conditioner that lasts longer than a decade, at least uses the same gas, you know? Would my boiler please work for an entire year? I can't even get through a season.
Well, that's why they have you counted in the yes, I'm going to purchase something category.
And we were talking with, I think it was Aoifinn Devitt, who made the point that when it comes to the other big story of the morning, of course, President Trump saying that he intends to fire Fed Governor Lisa Cook, it's not exactly a household table discussion sort of thing that's going to rise to that level necessarily in the same way that inflation might, for example. So I would assume that you wouldn't see that come into surveys of consumer confidence such as this.
No, I wouldn't think that this would really register with the American people. They have no idea probably who Lisa Cook is. But if it registers in the markets, and we've seen only a small amount because people in the markets at this point probably don't expect Trump to succeed, so they don't think it's a terrible problem. But obviously, if it looks like he's going to take over the Fed and that would lower rates dramatically and raise inflation, you'll get a big market reaction, and that would set people off. They may not know the cause of it, who Lisa Cook is, but they would know that their 401ks were in trouble and that the overall market went down, which they would see as a sign the economy's in trouble.
She went to Oxford, Lisa Cook.
That's pretty good.
Before getting her PhD at Berkeley.
Huh.
And then, what, was she a professor at Michigan State?
She taught at Harvard, and then she went to Michigan State.
Sparties, which I'm a fan of the Sparties, obviously, because they're not the University of Michigan.
I knew you were going to say.
Mike McKee, thank you very much for that roundup. Mike McKee with the Conference Board numbers and a little bit more on the Lisa Cook saga that, at least at our tables, we'll continue to discuss. Let's bring in eToro global market strategist Lale Akoner right now to talk about the effects on the market. We don't see much in terms of the pressure on the Fed here. I guess this market right now is all about Nvidia. Is that fair to say, 30 hours ahead of earnings?
To some extent, I think, Matt, that's fair to say, although I would say that the Fed independence questions are impacting the treasury markets. We're seeing the curve steepening, dampening the the demand on the long end side. And I do think that inflation worries is still top of mind as well. So we are seeing that in the treasury market at the moment. But it is fair to say that for this week, Nvidia earnings is top of mind. We do expect good results, and obviously the fact that it's carrying now 8% of the S&P 500, it's quite important to monitor this very closely.
We need to get the countdown clock up on the screen. 30 hours to go until Nvidia reports earnings after the bell tomorrow. So that, of course, is the mega cap of mega cap tech names. Let's talk about mid and high quality small caps. You highlight that in your notes as an area that you're interested in, which I find interesting because it seems like investors just keep leaving that sort of sector for dead here, Lale. What is the bullish case there?
Look, I think, again, higher for longer rate environment is still intact. That's why we're saying that go look at high quality small caps. I'm talking about S&P 600 and not necessarily the broader Russell 2000, right? So we're saying that, look, small caps are now cheapest since 2001. And obviously the fact that near-term rate cuts seem to be coming, I think this will be a positive boost for these, mid to small cap range. Again, on the high quality, we're saying that cash is not as abundant, liquidity is not as abundant as, say, pre-pandemic, and therefore you need to take a look at those companies with high quality cash generation that can cover their debt as well in the long term.
One of the reasons, in addition to that high interest rate environment that you mentioned, that has been given to me as a reason why small caps can't seem to get off the ground is that you have fewer companies going public. Maybe we're starting to see some bounce back when it comes to the IPO market, but certainly not back to any sort of normal level because you have companies just staying private for longer. And as such, you don't have that typical premium that you can follow of small companies go public and then they get bigger and then they graduate up into the mid-cap index. I wonder how you think about that because it seems like an existential problem for that size tier.
Look, I think that, again, given the fact that the Fed is eager to, again, resume their easing policy cycle is quite positive for IPOs, is quite positive for M&A activity overall as well. So it's, again, we need to take a look at how the inflation number will come at this stage. Obviously, they are very concerned about the labor market and the growth profile of the economy. As long as, I would say, there's not a major recession, it will be positive for these type of activities. And also, again, for small caps to perform well.
Lale, if there is a disappointment in earnings, I mean, not just Nvidia, but let's say out in the next earnings season, or policy disappointment, real pressure on the Fed that creates a true lack of confidence in U.S. institutions, how do you hedge on the downside?
Look, it's interesting, given the fact that obviously the Max 7 are taking so much of the S&P 500 in terms of their weight. And as we've said, the Fed independence is definitely damping demand for treasuries. And treasuries have not been delivering 10 months since the first rate cut, which is quite interesting. So again, to your question, how do we make some defensive allocations in our portfolios? We're saying that obviously real assets, commodities, infrastructures in this environment will do well. We like uncorrelated diversifiers. Think about obviously gold, digital assets. Bitcoin's volatility has come down on a long-term basis, which again increases the institutional investment in the space as well, which will help volatility go down even further. And it is an uncorrelated diversifier as well on a long-term basis. We again like multi-asset income strategies, and we like regional and international value plays as well to hedge ourselves again from that concentration risk that we're seeing in the market right now.
All right, Lale, great to get some time with you. Have a great rest of your day. That is eToro global market strategist Lale Akoner. Meanwhile, let's get a look at some of the single stocks moving this hour. We start with AMD partnering with IBM to build quantum supercomputers. That is giving a lift to shares, which I'm sure we'll show in a second. And we just learned what supercomputers are, quantum supercomputers, from Mandeep Singh. There it is.
You may not even interact with them directly, Katie.
I hope not.
But you will still be connected. So AMD up 1.5%. EchoStar, after that $23 billion cash sale of its spectrum, up 78% to what I believe is an all-time high. And this is interesting.
Yeah.
IBKR, Interactive Brokers, is down.
Yeah.
0.4%. Makes me want to look up Walgreens.
What's going on there? Of course, the news there, the reason that we're surprised is that we learned that Interactive Brokers will join the S&P 500, replacing Walgreens. So you take a look at the longer-term chart of IBKR. It's had a really big run-up since the April lows. So maybe there was some anticipation that it was going to get this boost, and maybe it's a sell the news type of situation here.
All right, yeah, maybe people knew, were betting on it, and now are taking profits. If you look at the longer-term picture, IBKR up 389%.
It's a pretty handsome chart you got
over
there.
the past 5 years. So Interactive Brokers has doubled, tripled, quadrupled, almost quintupled over the past 5 years. Walgreens is down 60% over the past 5 years. So getting absolutely stomped.
Sign of the times.
And that's one reason why it's getting taken out of the Standard & Poor's 500 index. Walgreens today down about 0.2%. Coming up, President Trump has moved to democratize access to alternative assets. That's how he put it in his executive order. We'll speak to Atomic Invest CEO David Dindi about the move next. This is Bloomberg Open Interest. Let's get out of high interest. Look at what's making headlines around the world. Eli Lilly's experimental obesity pill helped patients lose 9.6% of their body weights in a trial that moves the company one step closer to a potential approval. This is the second of 2 trials Lilly is using to show health regulators that its drug is safe and effective. The first trial disappointed investors. The obesity pill market is expected to grow by $95 billion by 2030. Today, it looks like investors are pleased. Secretary of Commerce Howard Lutnick is suggesting the government is looking at the defense sector when it comes to taking potential stakes in companies. His comments come after an unorthodox deal in which the U.S. obtained a 10% share in Intel. Lutnick singled out Lockheed Martin, claiming the company makes much of its revenue because of the U.S. government. And in your mind, you can go so much further from there. U.S. investments in renewable energy projects plunged this year as developers responded to White House policy shifts targeting the sector. New analysis from Bloomberg's BNEF shows that investments fell by $20.5 billion, or 36% in the first half of the year. Meanwhile, in the EU, investment in renewables has surged to nearly $30 billion in the first half of the year, according to the report. And earlier this month, President Trump issued an executive order easing access for asset classes like private equity and crypto in retirement accounts. ICI CEO Eric Pan discussed the challenges facing this plan.
I think right now there are a lot of limitations. So there are limitations on what ETFs can invest in. There are limitations on what regular mutual funds and collective investment trusts can do. And then separately, it is how do we get it actually into 401k offerings? Right now, a lot of people, you go work for a company, you have someone who makes a decision as to what's available to you. So right there, the ERISA rules have to be changed to make it possible.
All right, I think the second question is one of the most interesting. And joining us to talk a little bit more about this is David Dindi. He is Atomic Invest's CEO. He also co-founded the company. David, great to have you in here with us. How would your company, which has already kind of led the way in helping retail investors get pieces of these kind of assets, how is a company like Atomic going to help them put them in their 401ks?
So to take a step back, it's important, first of all, to understand what Atomic does. So we're not a direct-to-consumer application. Instead, we partner with companies and institutions that are looking to offer different investing products to their clients. So we partner with companies like NerdWallet, companies like Bluevine, companies like Yield Street that provide access to private market investments to their clients. And so the way that Atomic could work in this particular space is actually to work with retirement plan providers and record keepers to be the custodian for these underlying private market investments in their plans.
So the balance that I guess regulators are trying to strike here is allowing people in their retirement accounts to have access to these what are fairly risky and sometimes illiquid products and keeping them safe, right, from blow-ups. How do you think this is going to work? Like, obviously, some alternative investments, the illiquidity isn't a problem since they're retirement accounts. On the other hand, when you say Yield Street, I think about crypto. So how's that going to work?
So you're right. Illiquidity is one of the gating factors for broader acceptance of private market investments. But if you think about it in the context of a retirement plan, typically these are longer dated investment plans. And so when we speak to practitioners in this space, many of them are looking at putting it into target date funds and having it be a small slice, maybe 5 to 10% of the overall allocation. As for crypto, I do believe that there are advancements happening in the tokenization space to actually provide even more liquidity on top of these private market investments.
I'm curious what demand looks like. We were speaking to Deb Boyden of Schroders yesterday on the close. They recently put out a study that found that 45% of the investors that they surveyed would actually like to add private assets into their retirement plans. And I wonder if you have any sense of what that demand looks like, because we know that the issuers who actually are trying to offer this up certainly want to make this happen, but does the end investor thinking about their retirement plan truly want this as well?
So I think the proxy that we use to gauge demand for private market investments in retirement plans is what we're actually seeing in taxable accounts. So as mentioned, we are already providing access to private market investments in taxable accounts. And we're seeing it as a product that's actually gaining quite a lot of steam, especially private credit funds. Most of our investors, at least with some of our partners, are investing huge sums to get additional yield in those products.
Well, you mentioned private credit, and that's something else I was curious about. We say private assets, but that's a pretty broad umbrella. You think that, the average person has heard about private equity, might have some idea of what that means. Private credit hasn't been socialized to the same degree, it feels like.
It hasn't. It hasn't been. It's only been in the last, maybe since 2010, that it's become a lot more commonplace for people to invest in private credit. But I'd say for the mass retail investor, it hasn't been truly accessible, mainly because of accreditation requirements. And at the same time, there aren't that many platforms that are giving access to these securities in a way that is accessible. So in a fractional way, for example.
That's why I think Yield Street is so interesting, because you can do private credit, litigation finance, art collectibles, and then the fractional ownership is something that you were doing even before that partnership at Atomic. I remember before you even had your partnership with NerdWallet, your business has grown significantly since then. And to that point, you've got some new financing. Tell us about the latest round.
Yeah, so we just closed a $30 million raise from different venture capital firms, as well as institutions like Nationwide, Erie Insurance, Intuit, as well as Aquiline and Brewer Lane. The company has grown significantly over the last year. We've more than 52-fold the number of investing accounts that we serve. We've tripled revenue. We now trade about $20 billion on an annualized basis. And so this round is very exciting to allow us to broaden our mandates in serving traditional financial institutions, as well as companies in different regions of the world.
All right, David, great to get some time with you again here on Open Interest. Appreciate you coming back. Atomic Invest co-founder and CEO David Dindi. Still ahead, General Motors breaks into F1 with a superstar Cadillac driving team. We'll speak to the CEO of Cadillac F1 later this hour. This is Bloomberg Open Interest. Let's get a check now on the stock market using the move screen, which is the most dynamic way to look at the S&P or any of the big indexes. You can see right here that we have 240 stocks gaining, 260 stocks down. So the breadth is to the downside. However, we continue to rise higher. As you can see here, right now it's 64.45, so about 23 points, I should say, away from an all-time high. Nvidia has turned around. When I looked at the chiclets earlier, it was down about 0.25%. Now it's up 0.2%. That helps Eli Lilly, also one of the biggest point additions to the S&P 500. On the downside, you have Apple and Google weighing on the index. Let's take a look at the breakdown in terms of the sectors here. Industrials are the biggest gainer, 0.6%, followed by tech and materials. You see healthcare there not doing quite as well as it was when Katie last checked, or at least at that point, it was one of the only gainers. Now you've got 5 sectors on the rise, 6 sectors to the downside. Energy, the biggest weight here as oil falls. Consumer staples and communication services, that's your Alphabet and Apple right there. Katie, we're about to get ready for back to school, or in some cases, the first time you send your kid to school season.
That's true. I will say that Starbucks brought back the pumpkin spice latte today, I believe. So summer's over, and coming up, the back to school bust. Parents tighten their budgets as higher prices start to sting. Cadillac Brands CEO Marc Rosen joins us next with insight. This is Open Interest. It's the second biggest retailing event of the year, the back-to-school season. And as students sharpen their pencils, parents are shaving their budgets. A new study out from Deloitte shows that spending will decline this year as tariffs begin to inflate prices. Here with more is Cadillac Brands CEO Marc Rosen. Cadillac owns brands such as JCPenney and Brooks Brothers, among others. Marc, pleased to have you with us. Let's talk a little bit about the expectations, because we've seen this, right? That people are concerned about prices continuing to go higher here. Even though the rate of inflation has cooled down, the absolute levels are still high. How is that shaping up from your perspective?
Yeah, well, I think what we're seeing this holiday season is certainly, I think for parents, there is a little bit more uncertainty about the economy. But at the same time, their kids are going back to school. And, I think that is a unique thing about all of our brands, from Aeropostale to JCPenney to Lucky Brand, is that we can make both the parents happy because they're going to find an incredible value when they come into our stores, but we can also make kids happy, because the other thing that we know for sure is happening is that kids are going back to school, and they want to go back to school, and their parents want them to go back to school with the confidence of having the latest style and the latest fashion. So they're going to come into Aeropostale, they're going to find the newest trends, which is wide leg, baggy, relaxed denim, but they're going to find that it is buy one, get one free, which is an incredible value when you walk out the door, so that both the parent and the kids are going to be happy.
I wonder what the effect of tariffs are going to be, Marc. I look at those brands, some of them, I grew up with. Brooks Brothers was my first suit. But I imagine a lot of them are getting the textiles and sewing them, cutting and sewing them in foreign countries. So how do these higher tariffs affect your margins and then the price that consumers pay?
Right. I think that's been actually one of the advantages and one of the strengths as we've come together as Cadillac Brands. So as you know, Cadillac was formed with this combination back in January. And as we looked at how we come to life for the consumer, we come to life, whether it's Brooks Brothers or Aeropostale, Lucky, or JCPenney, in a very unique way for the customer. So that denim's going to look unique, that suit's going to look unique. At the same time, what we're focused on is how do we take the power of Cadillac behind the scenes for everything that the consumer doesn't see, and put that together so that we can bring consumers the best possible price and the best possible value. And that's where really our sourcing teams are working to put together all the denim that we buy across the portfolio, all of the fleece that we buy across the portfolio, so that we make sure when we're coming to life for the consumer, we're bringing them the best value, because especially at times right now, that's incredibly important, is to have great fashion at an outstanding value.
Right, but those things, Marc, are not made in America. So, the age of Cone Mills denim is long gone. You've got to import them. They're cut and sewed overseas, and they're going to have tariffs, at least 15%. Are you taking that into your margins, or are you passing that on to the consumer?
We announced at the beginning of the back-to-school season that we were going to hold pre-tariff pricing on all of the key items. So whether that's denim, t-shirts, backpacks, or fleece, we're holding pre-tariff pricing, really last year's pricing on this year's back-to-school items. It's really the job of our merchants to be the buying agents for our customers, and we know what's most important for them at that time. And so at back-to-school, we know those are the most important items, and we're holding prices on those items to make sure the consumer sees the best value. You will see us do similar things as we go into the holiday season.
And Marc, you bring up denim, and I want to talk a little bit about what we're seeing in the apparel space when it comes to what's going on, of course, with American Eagle, their denim ad with Sydney Sweeney. You saw seemingly a response from Gap over the weekend with their own denim ad. I wonder, as the CEO of Catalyst Brands, how you approach advertising in this day and age.
Right. So last week, you also saw us introduce our Addison Rae fit in our Lucky Brand stores, denim focused. And Addison, we actually took the Maggie fit, which was a 90s heritage fit. Addison Rae was wearing that. Our team actually sent her a pair of the jeans, and she helped us co-design a new product based on that Maggie jean that we introduced last week. And it was incredible on social, and we've seen really strong response in store sales. And we're seeing a younger customer come in for that as they're finding that product in social. So we think there's there's real potential for those collaborations.
Matt, in case you were wondering, Addison Rae is a TikToker who now is a pop star. She came out with her debut album.
Okay, so a musician.
Yes,
from TikTok.
Yeah.
Pepsi. There was a long time when I didn't know who Drake was. Okay. So I don't have the best pop culture. Although Sydney Sweeney is a name that I know. I want to dig deeper into what's going to happen to Brooks Brothers here, Marc, because I think a lot of people grew up getting a first suit at Brooks Brothers, getting shirts made at Brooks Brothers. The fleece is a brand that I think touches especially people on Wall Street, our viewers. So are we going to see these brick and mortar stores come back? Are you going to be selling it through JCPenney and online? I mean, what's your plan for this iconic American brand?
Yeah, we're really pleased actually with the results that we've seen in Brooks Brothers. Brooks Brothers has had really strong comp store sales so far this year. And really great product out there. I think as we're talking about back to school, if you go into Brooks Brothers right now, you'll see our university shop, which is really bringing in a younger customer with things like rugbies and V-neck sweaters and sort of the nostalgic past of varsity and going back to school. So we're seeing some really positive things in that brand. And when you talk about physical stores, we were also really excited this summer to open a brand new flagship store at 195 Broadway, kind of in the heart of the financial district. So those full price Brooks Brothers stores are very profitable for us, and you will see us continue to grow because we believe that full price store in the right mall has a lot of potential.
And Marc, we've talked about some of the different brands that you have under your stable, Brooks Brothers being one of them. When you look at the landscape overall, you are starting to see some consolidation among consumer brands. Do you think that there's room to add to your portfolio here?
Our focus right now, like I said, we came together in January and we're really building the combined power of Catalyst and putting together our sourcing operations, putting together our store operations, and making sure that everything we do behind the scenes, we do in the most efficient way so that we can bring the consumer the best value. And then we're focused on the front end of making sure that each of our brands comes to life in a unique and distinct way for consumers. If you look across the portfolio from Brooks Brothers to JCPenney to Eddie Bauer to Nautica to Lucky and Aeropostale, right, they each come to life in a different way. We are building a platform, and we believe as we build those core capabilities that we can add more brands into the platform. And those brands are going to benefit from that combined power of sourcing and store operations and supply chain to bring the consumer great brands at a better value.
All right. Marc, great to get some time with you. Really appreciate it as you prepare for, I guess, your busiest season. Catalyst Brands CEO Marc Rosen getting ready for back to school at JCPenney, Aeropostale, Eddie Bauer, Brooks Brothers, and more. Let's get a check on what's going on in the markets right now. We do see, we've pretty much unchanged on the S&P, but we were in the red, and now we're in the green as Nvidia swings from losses to gains. The NASDAQ doing a little bit better, up 0.2%. The 10-year yield rising a little, but 427, 427.90, still at a pretty low level.
Yeah, pretty much unch when it comes to the 10-year yield. I will note that on the S&P 500, trading volume is off by 28% from its 30-day average. So that's the whole story. There is some action to be found underneath the surface, though. So let's take a look at some of the individual movers here. And we do have analyst upgrades from Baird, retailers, VUp Corp, and Canada Goose raised to outperform the firm, citing clarity with tariffs, which is interesting because it feels like there's still a lot of big question marks out there.
We've gone through this before, I think, but do you know who Jeff Spicoli is?
We've definitely gone through it before, and I still don't know.
He made Vans famous in Fast Times at Ridgemont High. Eli Lilly's weight loss pill moves ahead after a trial shows that patients lost 9% of their body weight in the trial, and the shares are up 2.9%, which is better than last time when they lost more weight, but I guess it's because this means they move one step closer to an approval here.
Yeah, and this is good news for Eli Lilly. This year has been about trying to get their mojo back. I mean, they're still down about 7% year to date, but today's movement certainly helps.
Coming up, I'm very excited for this.
I know.
Cadillac securing the services of two of the most popular and beloved drivers in Formula One ahead of their debut. We'll speak to Dan Towriss, Cadillac F1 CEO, next. This is Bloomberg Open Interest. An iconic American luxury brand is joining Formula One next year. GM's Cadillac team will make its debut with two superstar drivers, 10-time Grand Prix winner Valtteri Bottas and 6-time Grand Prix winner Sergio Checo Perez. Here with us now is Cadillac F1 CEO Dan Towriss. Dan, it's great to have you here with us. I'd love to first just get a little bit of a background check on how you got into this business, from running Gamebridge, from being an insurance executive, to now running teams across NASCAR, IndyCar, and starting next year Formula One.
Yeah, so it really started in sponsorship, with the team and a partnership with Andretti. But then kind of when we look at TWG Global, the parent of our company, and what Marc Walters built in a sports media company, we saw a thesis in motorsport to get involved and to really focus on Formula One, but not just Formula One. It's really every major motorsport globally, from Australian V8 supercars to sports cars, NASCAR, IndyCar, Formula E, and now Formula One. So we're very excited about that.
So it's I think really cool that you have the resume you do, because when I talk to Mark Royce, I ask him, how do you convert motorsports fans into buyers of Chevys, Cadillacs, Corvettes, what have you? Because you run this insurance company, and that's how you get your start here. I guess you've had great experience in doing those conversions. Now you hire people like Valtteri Bottas. I want to take a look at the tweet that he put out this morning. This is a guy who, not only is he an incredibly talented driver, obviously a Grand Prix winner, but he knows marketing too. This is what he posted this morning, I guess.
He gets it.
His dedication to an American brand here.
Yeah, we're so excited about these two. I mean, they're both, characters. They have storied careers in Formula One, but they're not done. This is the next chapter. They're the chosen two for the Cadillac Formula One team to hit the grid in 2026, and we're super excited about them.
So how long are you giving the team before you expect that you're going to win a race or a championship?
It is going to be a process. I mean, Formula One's the pinnacle of motorsport. It's so difficult. The smallest difference can make a huge difference on track. But I think that's where their experience comes in. We'll have over 1,000 people working on this team. And so a lot of times people just think about the driver of the car, but it's a team sport, And so that leadership and experience, knowing what to expect for a brand new team. So even though we have all these experienced people in Formula One, they've got to work together. We've got to build team chemistry. And so Checo and Valtteri, are the perfect choice to help, just bring that experience, give feedback on the car, get the team working together. They know what to expect. They've been there before.
So you're going to kick it off with Ferrari powertrains.
Yep.
You bring your own Cadillac powertrains in a few years down the road, but I'm guessing you're going to have to pay almost $500 million to get in, and then what, $250 a year? How long until you think you can become champions?
It's going to take a few years, but we're very excited about that. We're committed to this process. It is a multi-billion-dollar investment in total. We'll have over 600,000 square feet of manufacturing under roof in the U.S. between Indianapolis and Charlotte, between the team and the power unit company, and all those people working together. We also have a base of operations in Silverstone. So this is a global operation for Cadillac Formula One. And so really when we hit the grid, it's a new chassis and a new power unit next year. So it kind of mixes up the competitive landscape in Formula One. And so we get to figure out where do we stack up against these teams. None of these cars will have been on the track, together when we get there. And then what I'll be looking at is what does our progress look like? What's the upward trajectory of that team? Because that really gets to the question of how long till we run a race, how long till we get on a podium. But the ambitions for this team are high, and the resources are tremendous. And so together with General Motors, with Marc Royce and the tremendous team there, Mary and Marc, we're going to be working hard to make sure that we're competing at the top of the food chain in Formula One.
I wonder what this means for the Cadillac brand, because, all right, they have had in the past, I guess, the Monster in the 1950s at Le Mans, and of course, I just went to Le Mans this year to see them with Team Joda, and their hypercar is amazing. But you hadn't previously thought about them as a sports car brand. Obviously, they had the CTSV, and now they have the Blackwing, which are, creme de la creme. But what do you think this does for Cadillac sales?
Well, I think it's really pushing technology and innovation, with this new series of cars that they're coming out with. And I think, Cadillac continues to see their market share increasing, quite rapidly. So I think it's the perfect time for Cadillac to come into Formula One, to really even start to push a younger demographic that we're seeing, the growth in Formula One. And so I think, as I've talked to fans, everyone has a Cadillac story. And so there's a strong connection to that brand. So combined with the new products that Cadillac's coming out with, and then the relevancy of being in Formula One, competing against Mercedes, Ferrari, McLaren, Aston Martin, and the likes, I think it's a good combination for Cadillac.
And going to be an amazing rivalry with Ford. I mean, I was thinking at Le Mans about how cool it'll be when Ford goes into the hypercar, but that's only for niche, totally dedicated car freaks. This is F1 now. Yep. I mean, one of the most popular in America. It's up there with NASCAR now, I think. And Ford's going to enter F1 next year too. So how do you feel about that crosstown rivalry, GM versus Ford?
It's interesting. It's very different. I think Ford's partnership with Red Bull is at a much different level. I think what we have with GM here is an equity partnership, not a sponsorship. Their integration, they're leading the power unit development. They're not assisting in the power unit development. So the participation of GM and Cadillac in this versus Ford and Red Bull, very, very different. But yet you still have these American motorsport powers, automobile, powers, going head to head. But then when you think about, you've got 1 in 7 Americans that identify as a fan in Formula One. So that's over 50 million Americans say they're a fan of Formula One, but they're not yet watching races. So the real key is going to be, how do we convert those fans into race watching fans? How do we convert them into Cadillac fans, which I think they'll see the bump in, in car sales.
All right. I'm pretty excited.
I know you
Can you tell, Katie?
I can tell, yes.
Dan, thanks so much for joining us. Dan Towriss there of Cadillac F1. By the way, for more of this kind of excitement about cars, check out my podcast. Every week, Hannah Elliott and I put out a new episode of our podcast, Hot Pursuit, which you can download on Bloomberg.com, on Spotify, on Apple Podcasts, wherever you listen.
You have a podcast.
Yes,
I've
it's
never
called
heard
Hot
that
Pursuit.
before. Yeah.
You should download it.
I should. Anyway, coming up on this show, Open Interest, President Trump moving to oust Fed Governor Lisa Cook. We'll head to Washington next for the latest. This is Open Interest.
President Biden wanted Bloom Raskin as governor, as I remember correctly, as the vice chair, and the Democratic Senate said no. So, Trump doesn't have the ability to unilaterally impose his will upon the Federal Reserve Board of Governors anyway. The presidents always believe they've got people queued up who might vote as they wish. They are very frequently disappointed in that regard.
And that was Terry Haines. Pangea policy founder, speaking to us the last hour. President Trump taking actions to fire Fed Governor Lisa Cook. She is defiant and refuses to quit. Joining us now from the White House is Bloomberg Washington correspondent Tyler Kendall. So, Tyler, Katie and I are just wondering what's going to happen next. Like, are we watching at the Federal Reserve to see if she's going to go into work today? Is it possible that someone will block her? How does it look?
Well, that's going to be one of the biggest questions here, Matt, is what comes next here. But what's clear is that there are legal questions that need to be answered first, and that's probably going to define the path that we see this takes, because as you all know, there is a very high bar to remove a Federal Reserve official, a protection that was actually bolstered by the U.S. Supreme Court earlier this year. You'll recall they heard a pair of cases related to firings at other independent agencies, and the Supreme Court had ruled that the Trump administration was allowed to oust those officials, including one at the National Labor Relations Board, but did signal that it would shield Federal Reserve officials due to what they called the Fed's unique structure. Now, in order to remove a Fed official, I know you've been talking about it on this program, the White House would have to demonstrate what's known as cause. The thing is, cause isn't explicitly defined anywhere, though is historically meant to mean malfeasance or neglect of duties, responsibilities related to the job. And President Trump had outlined in his letter yesterday that the White House felt that it had sufficient cause, in his words, over these allegations of mortgage occupancy fraud. But at this point, it is really unclear whether or not that meets that high legal bar. And certainly to Cook, it doesn't seem that she feels that it does. We did get a statement from her through her attorney where she said that she does not believe that President Trump ultimately has this authority and that she isn't going to resign. It's really important, of course, for us to put into context here that no formal charges have been brought against Cook, though the Justice Department says that it's going to investigate this. But just to wrap up for your original question, the thing that we're all watching for here is whether or not Cook applies for this injunction, which would essentially reinstate her while the legal process plays out. That, of course, would have big implications for the day-to-day job, but also looking forward to that September meeting. So that's what I'm keeping my eye out for.
All right, Tyler, really appreciate your reporting. That is Bloomberg's Tyler Kendall. She is live outside the White House. Of course, it's interesting to be having these conversations, Matt, and seeing the non-reaction in markets right now. I mean, you have the S&P 500. It's been in a trading range all day, maybe a little bit of movement you saw in the bond market overnight, but yields pretty much unchanged on the 10-year yield because there's still a lot of questions. First and foremost is whether or not Trump actually has the authority to do this.
Yeah, it seems pretty unresolved right now, and that may be why we don't see a lot of reaction in the market. One place where we do see a lot of reaction is in Cracker Barrel shares.
Yes.
And this is also reaction to President Trump, though having nothing to do, obviously, with Lisa Cook. President Trump tweets out, Cracker Barrel should go back to the old logo, admit a mistake based on customer response, the ultimate poll, and manage the company better than ever before. They got $1 billion worth of free publicity if they play their cards right. And he's not wrong.
I don't think he's alone in that opinion. It seems like a reaction to the logo itself, politics aside, has been pretty uniformly negative.
All right, coming up tomorrow, it's Nvidia Day. Kim Forrest, CIO at Boca Capital, joins us, as well as Marc Patel from Allspring.